Alright guys, very welcome to another week ahead video. Now this week our focus will turn back to the British pound. We've got another week of formal negotiations set to take place in London. So a lot of focus will still be on the pound and seeing whether we get any further moves towards a deal or towards a no deal situation. Now the past week has been a very exciting, interesting, and probably very frustrating week from a Brexit development point of view. Exciting for those of us that managed to bank some pips from the recent news. Interesting for those sitting on the sidelines, and probably frustrating for those who just want all of this mess to finally come to an end. Now, if we take a look at the Euro-Pound chart above, it brings back a lot of memories about the 2019 year-end Brexit headline circus that we had. We had lots of conflicting, both positive and negative news reports hitting the wires on a daily basis, causing very volatile price swings. And, these types of trading environments is definitely not for the faint-hearted traders. And for swing traders out there, the pound might not be the best option right now to trade until a deal or a no deal outcome is confirmed. Now, one of the big differences between 2019 and 2020 with these negotiations is that the risk premium built into the pound is arguably a lot smaller this time round. And ING Investment Bank suggests that due to that reason, there's probably a lot more room to the downside in the event of a no deal outcome and lesser room to the upside in the event of a skinny deal. Now, this week's price action confirms that. It shows that there's probably a lot more traders right now betting on a deal outcome versus those betting on a no deal outcome. And that was very much evident in the outsized moves we saw in the pound from good news versus bad news. Now, for those who were paying attention and had access to the speed and accuracy of an audio squawk like we do inside the Financial Source terminal, and for those that had access to our daily analysis, should have been able to bank some pips on the short-term sentiment shifts that we had during the week. Now, as we head closer to the end of the year, and as deadlines start to inch closer, we should expect further volatility in the pound, and we do need to be ready to capitalize where we can. We also had that video conference between PM Johnson and EU Commission President Ursula von der Leyen on Saturday. It didn't really provide any fireworks, but according to sources, the call saw both parties agree that enough progress has been made to open up additional rounds of negotiation. And in the week ahead, markets will once again turn their attention to any further news regarding breakthroughs or breakdowns in the talks. Now, in the week ahead, after the call between the big guns that we had on Saturday, Chief Negotiator Michel Barnier will once again travel to London this week for another formal round of negotiations. And after that, we'll see David Frost from the UK side go to Brussels in follow-up talks the week after that. Now, it should be absolutely no surprise right now that the common issues of fisheries, state aid, and governance still remain intact. And the excellent team at ING has designed a great illustration above that gives us most of these contentious issues that we need to be keeping track of on a daily basis. Now, as talks resume this week, focus will shift to any reports about possible breakthroughs or setbacks once again. Whether both sides really want a deal will be evident in the way they approach the current hot topics on the table, as both sides will need to show a decent amount of compromise to get a deal across the table. However, all in all, the more positive attitude towards a deal is evident, and as long as the momentum can be kept, the two sides can move towards the so-called tunnel negotiations, which is more intense talks and usually kept outside the public's prying eye. However, the EU has made it very clear that some progress or landing zone, so to speak, on the most contentious issues must first be found before tunnel negotiations can start. So with the limited time left, it's really in everyone's best interest right now for a deal to be struck. Now, according to some reports over the weekend, there is some infighting right now amongst EU officials about the legal steps taken against the UK on Friday, which might complicate talks in the weeks ahead. However, reports also suggest that Barnier will be traveling to Germany, meeting up with German Chancellor Merkel on Monday, who suggested on Friday that the EU needs to show flexibility or fresh flexibility, according to The Guardian. So a deal is still up for grabs right now, and with time running out, there's really no time for shenanigans anymore, and we would expect things to really start to intensify now as we head closer to those important deadlines. So looking at some possible sentiment shifts in a trade plan for the week, scenario one, breakthroughs, any signs of further progress and positive attitude should see a continuation in pound strength in the week ahead. We need to be on the lookout for any possible breakthroughs in those key contentious issues such as fisheries, state aid, and governance. Also watch out for reports of the two sides possibly agreeing to move into that tunnel negotiations, that would mean that there was enough progress for the two sides to basically move into that, and that can also be very pound positive. Alternatively, though, even without massive breakthroughs in the week ahead, the fact that trade talks are still continuing and we have a follow-up round shows that both sides are still in the game and really do want a deal. Now, we would expect this scenario to see pound appreciate across the board, especially against the euro, which has a couple of short-term factors right now that could keep the single, or should keep the single currency pressured. Scenario 2, in terms of breakdown, so any signs or comments of a breakdown in formal talks this week will be a step in the wrong direction. It is important to keep in mind that any negative news has seen more limited reaction this past week compared to the positive news, but any significant breakdown in talks would see pound pressured. At this stage, though, it would take either side to walk away from the deal completely or walk away from talks completely to cause significant amounts of sell-offs, in our opinion, in the pound, and we would still favor pound upside opportunities versus pound downside opportunities unless that happens. Now, if scenario 2 plays out, we would expect that to see pound weakness across the board. However, the best currency to pair against the pound weakness in such event would be best determined by the current market sentiment at that time. It could be either the US dollar or something like the Aussie dollar, depending, of course, on what is happening to the overall risk sentiment at the time. Now, guys, given the possibility of further chopper price action this week, the pound can be a risky currency to trade at the moment, especially for those traders who are new to trading news events and unscheduled sentiment shifts like we had this week. So it is never nice to see the market move without us, but capital preservation should always be our top priority, which means staying out if you're unsure is arguably always going to be the best course of action. Similarly, as Brexit sentiment changes from very positive to very negative in a very short space of time and then back to positive, it might be best for swing traders to keep this one on ice until significant moves in either direction is clear, whether that is a deal or a no deal outcome. So staying nimble and staying in tune with what's happening is the best advice for these types of volatile themes like Brexit, especially this close to the deadline.